Are you thinking about buying a home, but stuck waiting for interest rates to drop? You're not the only one, but you might be asking the wrong question. Today, we're breaking down what's really driving rates now and what it actually means for buyers like you in today's market. So stay tuned. Well, happy Wednesday, everyone, and welcome to the Mojo Show, your real estate podcast where we talk about everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're answering the question we all want to know the answer to, and that's what's going on with the market, especially with everything on over in the Middle East going on right now. And to help answer those questions, we're pulling a special guest of ours into the show. But before we get to all of that, little coffee talk with the Joes to get things started. Joe, I know we were talking the other day about 5-star reviews.
Yep, we had it on our Tuesday morning coffee roundtable, and I'm hoping that I don't have internet issues again, but I feel like I just lagged a little bit. Sorry about that, Joe.
Well, we'll have to give
what's going on.
Well, we'll have to give a 1 or 2 star review on your internet use.
Hey, don't worry about that. I'm calling them. I've got a new router that's coming, so hopefully this corrects it. But Tuesday we have our coffee roundtables, and Josh Reed, he's a listener and everything else to our show and participates a lot. We were talking about Google reviews and asking people for reviews, and one of the things in there that it really caught my ear was, we don't, a lot of our LOs and a lot of people in our industry, they ask for those reviews only from the people they know they'll get a good review from. So I wanted your take on what Josh was talking about. When somebody gives you a bad review, how do you handle that personally when it comes to getting that type of feedback, to you, and why would we not want to see that in a review?
I've actually had one recently that it's not that it went sideways, but it could have gone smoother. I still sent, the email that I send to my clients afterwards to try to get a review from them. He didn't post anything. I wish he would have, because I would have, liked to kind of talk through it with him. I think that's the key right there. If you're not getting, a 5-star review, you get a 1, 2, or 3, is being able to go back through with that client and just kind of debrief, if you will, afterwards on everything. Because granted, the client may not have been totally happy, but it'd be good to address the concerns so that, those things don't happen the next time for the next person.
Now, when you look at reviews on Yelp or whatever, when you're going somewhere, because we talked about this too, when you see, low ratings, do you read the comments before you go to those establishments? That's one thing that I do, is I read those comments and I look at how is that establishment replying to that comment. And if they're replying to that comment about taking ownership, and that's one thing that I was listening to a lot of people talk about was this was out of my control, or that's out of my control. At the end of the day, and our guest speaker is a big person that always talks about that, is we got to control what we can control. And we've got to really hone in on not blaming other things that are outside of our control, because it all falls on us and we got to take that ownership. So when I see bad reviews, if somebody's taking ownership, I'm going to give them another shot. And it just opened up my mind a little bit about, if I get bad reviews, it's how I respond to that review versus that person was just crazy. Now, there are some crazy people that give reviews, which that's a whole different story and a different show that we could do. But that is the one thing I took away from that Tuesday talk, was all reviews are good depending on how you look at them. And a bad review helps me with coaching, helps me coach people better, helps me get better. I do like it when they don't put it out there to the public, but when they bring it to me, I like that. So it's just something I wanted to talk about this morning because I wanted your take on it also.
Well, and I think when I look at reviewing, like let's say I'm traveling, right, and I want to look at an Airbnb or something, or a restaurant or something, I want to see those bad reviews and what they say, because sometimes those 1 or 2 star reviews, what they say, it's like, come on, guys, really. I mean, you're just using this as a platform to vent and just be angry at the world, seriously. I mean, but then, I want to see the comparisons, between these 1 and 2 and the 5s. And, if you go to a place that all they have is 5s and, you read the comments and it's all fluff, then it's like, okay, you work there.
And that's like when you go look at reviews of somebody that does a service and you see, 5 stars, but you don't see any comments. And you're like, okay, people are going on there for family and whatever, which is good too. But it's just, a lot of those reviews, I look for the comments more than I look at the stars. And that's the one thing I wanted people to answer on Tuesday. And so today we have a lot to talk about. So we probably need to move on off the coffee talk.
Absolutely.
But I'm going to let you introduce our main man that's coming on today for us.
I've been looking forward to this, to have him on. I think we've been wanting to get him on. It's just the guy is so busy that it's a struggle to hone him in just for a half hour of his time to spend with us. So super happy and excited to have him on today. He is the director of sales for NXT Mortgage. Really, he does not need an introduction at all. He is the lone wizard to us all. Please welcome to the show, folks, Nash Paradise.
Applause is fancy. Thank you, Joe. Thank you, Joe. Before we get in, I got 30 seconds. I love your coffee talk concept. And there's something that I was just thinking as I was listening to you guys. You're making all the right points. It's, never waste a bad experience. Like, that's an opportunity. Doing a good job is good, but handling a problem, handling issues well, handling something complicated, taking ownership. And I think back to some of my best partners and some of the greatest relationships I've had, they came from handling adversity well. I would rather work with someone and give my business to someone who knows how to handle things, knows how to take ownership, knows how to admit when there have been mistakes. Like, that's someone that has integrity and I trust. And, I just want to encourage everyone watching, asking for that feedback, seeing how you can get better, taking that ownership. It's not only a sales tool, it's a human tool. It's demonstrating your humility in a way that people know, okay, I'll give this guy another shot. I want to trust them. So I love this subject this morning. I know we want to talk about more fun stuff, but I had to add my 2 cents there to the coffee talk.
Well, that's what we love about having people on when we do our coffee talk. Sometimes Joe and I don't even know what we're going to talk about besides a couple of minutes before. And I love your take on that, because my best relationships and my realtor partners are from mistakes that either LOs have caused that I've come in and I've saved, or I have caused, because I still make mistakes. And, Nash will tell you guys, I've been in this business for 40 plus years. Just 46. Kidding. 25. There's the 46. But, the nice thing is I've known Nash now, we're going on 13 years. I think 13 years of knowing each other and working with each other. But Nash, tell our viewers a little bit about yourself before we get into today's topics and talking about the market. Tell them about yourself a little bit and kind of what drives you. I'd love our listeners to know that.
Yeah, so I'm old like Joe and Joe. I'm a 20-year veteran mortgage broker. Started at the ripe old age of 22. So it's been my entire adult life has been mortgages. And while it was an accident getting into it, someone who knows someone has an opportunity, sees that, jumped into it. But what it's turned into is, just a call for service. I love the Rubik's Cube, the new challenges every single day, getting to work with, Joe as a partner and our other partners here, and, getting to coach and train and, grow together with people like Joe. I'm just going to keep throwing the word Joe around a lot, but, the integration, the people, it's different every single month. It's different every week, every day. It drives me. It gives me problems to solve. I feel like I get to use my mental energy however I want. If it's learning about the market, understanding global geopolitical economics, or if it's figuring out how to structure a refi. There's a lot of problems to solve, and it really keeps me engaged. So as my role in director of sales, that's a fancy title, but what it really means is helping loan officers, helping people, anyone know how to communicate. Sales is something I have and something you need. How do I bridge that gap? How do I make highly effective and efficient conversations? That's a big part of my world right now. And so I love being able to come on here and talk with you guys and, give some real world feedback on what's going on in a very exciting mortgage market.
Well, exciting mortgage market is I don't think that explains what we've been going through. And if you guys, especially my partners, if you see my emails or I'm giving you a market update, it's because of Nash, and I listen to his podcast. Nash, if you want to put your podcast out there, we can put it at the end too for the Monday market updates. If you really want to know what's going on with the market outside of just today's podcast, we'll put that at the end for you, and we'll give you a little plug. And you and Mr. Katie do a great job, so thank you. And also give you a shout out. And Joe, we didn't even mention this in the intro. Our intro song going in was written by Nash and his AI buddy.
I knew that sounded familiar.
Yeah. Yes.
So thank you for that.
Him.
Going into today, let's talk about the market and rates. What is driving the rates right now in your expertise?
So I feel like it makes it a short show. It's one of the most simple markets to digest and dissect that we've ever seen. And I've been covering this for a long time. Like Joe said, I do a podcast every Monday with my buddy Andrew. And, we talk nationally about what's going on with the Fed, with mortgage rates, with all the econ data. We've been diving in for years into jobs reports and, PCE and CPI and all these letters that mean things that an average person doesn't pay attention to. But literally, it breaks down into labor and inflation. Those are the two things. So if you'd asked me 6 months ago, what's driving rates? How are things moving? What's going on? I'm going to talk about labor and I'm going to talk about inflation. Those are the things that are driving the Fed. And what drives the Fed drives the bond market, drives mortgage-backed securities. Ultimately, these are the economic factors that play into our futures on interest rates. Right now, you can throw all that out the window. Nothing matters.
That's what stinks.
It does and it doesn't. And I've got a positive spin to put on it. It's highly volatile, and volatility is never a good thing. When you get volatility in the world, you get increased spreads. And that just means that based on the economic factors, based on the most important factor when tracking mortgage rates is the 10-year treasury bond yield. The spread between that and 30-year fixed mortgages, as we get more volatile, it gets bigger. Investors, lenders, they need some more meat on the bone because they know they could lose this tomorrow. They're working in a float system where they have to sell the paper on the secondary market. I'm not going to go down that rabbit hole because, Joe told me my audience doesn't want to hear all the nitty gritty. So I'm going to do my best to pull back. But
Thank you.
High volatility means higher rates, higher spreads. We are in high volatility, but we're also in a spot where one tweet can change the world right now. And literally, one tweet can signify the end of conflict, can tell us what's going on. And this geopolitical unrest in the Middle East is driving everything. First, it drives oil, and then interest rates follow oil. Why? Because oil drives everything. I think a lot of people don't understand just how significant the price of oil is. But when you think about it, oil is fuel, it's heating, it's energy costs, but it's transportation costs, it's shipping, it's air freight, it's cargo. Everything depends on the amount of expense to move it from where it's created to how it gets to you. For the even the person driving to the place to make the thing. Cost of oil is everything. And I don't think I ever realized quite how significant it was, but this is the factor right now. So as we've disrupted the Strait of Hormuz and there's, questions about where oil is going to move around, who has reserves, who can offload. Iran can't pump at a certain point because they're all loaded up. They need to get it out of the Persian Gulf. Oil prices go up, future inflation goes up, costs of everything go up, rates go up.
Right.
And that's what we've been dealing with here, for these last 6 to 9 weeks.
Well, I noticed this morning, maybe you can shed some light on this, that this morning we saw a little bit of a bump down in rates.
I'm not calling it a bump. I'm calling it like a plunge. In fact, the people that are smarter than me, and that's the chain of information. People smarter than me get information to me. I get information to you. We as professionals share that information with our referral partners, with our borrowers. It just keeps moving down, and it gets a little simpler each time. So I'm looking up at these people who are really, this is their full-time job. It's not my full-time job. It's part of my job. And we're treasury yields tumble, oil prices tumble, plunge. These are big words that mean big things. So we've got a huge improvement so far this morning on the things that move mortgage rates. They haven't hit mortgage rates yet.
Mm-hmm.
But the factors that cause mortgage rates to move, they lead. So the leading indicators are great. Why? A tweet. It's always a tweet. It's not really a tweet. It's like a Truth Social, but I'm calling them tweets because I'm 42 and I've learned enough social media. We're not going to get into what it actually is. But
so the headline of the day.
Headline of the day.
I go with that one.
Well, sorry.
I'm really old.
Yeah. Joe gets his newspaper and, sees what the news of the day is. That news of the day is going to say de-escalation is imminent. It's going to say the U.S. has presented Iran with a proposal. Iran is considering it, sending it to Pakistan to get feedback on.
Right.
That's it. And the fact is, just that movement towards de-escalation has caused these things to improve so significantly. Nothing has actually happened, which highlights one of the things I wanted to make sure everyone took away today. Rates don't move because of things happening. They move in anticipation of what we believe is going to happen in the future.
Right.
And my goodness, is that overly complicated and very frustrating. Money moves in anticipation of, not in reaction to. And so rates do the same thing. So right now, hey, good news cycle. Joe's morning paper said, good thing. I don't know if they could print it that fast. It was pretty early, but it was like 5 a.m. when I saw that alert. So it's definitely, it may be in your morning edition, but we're heading in the right direction. I think my favorite thing, I was doing an interview with Housing Wire yesterday. They were kind enough to reach out and ask a lot of the same questions. And I told them, hey, I only got like 10 minutes for y'all, but I'll give a half hour to the Mojo Show because y'all are a bigger deal than Housing Wire.
Yeah.
And
thanks for that plug.
What we are taking away from that is the availability of floor and ceiling. Where can things go? And what I think is really positive right now, if we get a full signed de-escalation, we get an end to this conflict, we are going down. We've got about 0.5% of movement when we catch back up. There will be transitory inflation, which means things are going to go up for a little bit and then come back down because of the spike in oil prices. But we will be moving down very quickly back into the established range, which is high fives, low sixes. And I know that doesn't sound that far away from right now. Overnight average is like 6.55. But the difference, it means a lot to the average consumer. It means a lot for affordability and for a strong, stable housing market. We really do a lot better at 6.1, 6.15. That's just better for everyone who's going to be paying attention to this information. As far as we're concerned, it is on the horizon. So we're definitely looking forward to that movement.
So let's bring this down to more, real life with the consumer today. Those that are looking to buy today, what should they be doing? What should the average buyer today, home buyer today, be doing?
So
wait.
Great question. My day job is a mortgage broker. That's where I spend about 30% of my time. But it's where I should be spending most of my time.
Eat that.
My job is to work with buyers, to close loans, to help people buy homes. So I'm having this conversation right now, and I had that question last night at about 8 p.m. Should we wait? And my answer was no. And I'll support it in this way. Right now, we're still, at least in my market in North Texas and with much of the United States, we're seeing enough supply and low demand from buyers. Mm-hmm. It's giving flexibility to buyers. We needed to ask for 10 grand off the price. We needed 7,000 in real estate concessions. We get these things because sellers don't have enough buyers competing for their property.
Mhm.
As interest rates fall, that's obviously going to ramp up. There's going to be some balance there. We'll get to that point. But the fact is, we also saw this when rates were at 7.5%. Buyers had all the leverage. We're at 6.5. It's not that far off, and we're not dropping that much further. So if the payment works, if affordability is there, if we like the property, ultimately, once you own it, you're in it. If we drop down to 565, 575 a year from now, cool. You can go in and refi. But there are a lot of people that need this added flexibility, who have lower down payments, who need help from seller concessions, who really, if they can get 20 grand off the list price of that house, now it makes sense for their family.
Mhm.
So I feel like both short and long term, there are a lot of wins that the market has created. There are a few buyers that it just doesn't make sense for them anymore. So that means less competition. So I feel like every situation is different, but we're not so high and prices aren't up to where they were 2 years ago, where high rates and high sales prices. No, we've come down to a point where buyer affordability is significantly better. And it does make a lot of sense. And in fact, there's huge wins that can be had just from this small increase in interest rates. So everyone's situation is different. Your mileage may vary. But as a real estate professional, my advice is let's go take a look. Let's run the real numbers. Let's see what makes sense for your family.
Yeah, I agree with it's not always the right time for everyone. But, affordability, budgeting, paying rent. If you're paying rent of $2,200 to $2,500, then you can get into a house maybe a little bit higher than that. And it just makes sense at a 6.5 rate, even a 6.75 rate. It makes sense than paying rent if that payment's a little higher. And I always go with the supply of homes out there. When that dwindles, that's when this market gets harder for those first-time home buyers.
Yeah.
Mm-hmm.
So I'm telling a lot of first-time home buyers, this is the best opportunity for you, because that $5,000 that I can get in seller concessions to offset some of your closing costs means a lot more than me dropping your price by $5,000 because you're not saving that on the payments. And I really like that in the market today. I don't want to see that it be too much of a buyer's market, because now you got too much supply. Your builders that are out there building, now they're hurting too. And it's just going to go in the wrong slide. So I don't want to see rates plummet right now. So in your opinion, over the next year, I know the Fed changes that. You guys share it, the percentage of when the rate cuts might happen and things like that. But in your opinion, over the next year, what would you like to see from a rates perspective? A consistency going down slower, or more, like you said, the plunge right now? Which one do you think is better for our market?
Yeah, no, great question. Slow is smooth and smooth is fast. When things move in a predictable, steady way, it's great. There's really no such thing as balance in the real estate market, because there's so much ebb and flow, and leverage changes pretty quickly. But I do believe that there is rhythm, which is my word of the year. So I had to work that in here. Rhythm is moving around. A few more buyers here, a few more sellers here. And maybe you need some builder concessions. Maybe new construction starts are a little heavier in this part of the year, maybe a little lighter here. Having a normal, regular rhythm is fantastic. And we do require smooth and steady on movement. And I'm predicting that as well. All the data points are showing the same thing. We're not going to see another Fed rate drop this year, short of something crazy happening. I know if you watch the news, read your paper, there's a couple people that are getting affected by a virus that's going around right now. I know we're all getting like 2020 vibes when we read those stories. And, short of a full-blown pandemic, we're not going to see anything drop significantly. We didn't enter World War III over Iran. That could have impacted mortgage rates pretty seriously. We don't have anything looming on the horizon. So I'm forecasting a slow movement. We should floor out a little bit in the low sixes and kind of hold steady there. But I do believe by the end of the year, target rate somewhere in that 5.79 to 5.99 range on the overnight average for the 30-year fixed. Now that's great credit score, nice down payment, but that's the trend that we watch to see overall movement. I think it's a very safe estimate to use. And that's, maybe it's wishful thinking, but all signs point to post de-escalation. Inflation will eventually come back down. Jobs have been looking really good. We should be smooth and steady until a tweet comes and shakes up everything I just said.
Well, and you bring up a good point, a question that, and I know we're running out of time here, so it's probably the last question we'll have. But I'm kind of on the flip side of this, Nash. What could actually raise rates back up?
Yeah, and this is my fear, and this is what I was quoted in Housing Wire yesterday, and it was funny giving this quote and talking about this, and then boom, very next day, rates improved significantly. I'm like, well, 70% of the time, I'm right every time. We still have all the makings of interest rates back at 7%. If this movement we have right now, this is looking forward to de-escalation, the end of this conflict. Escalating conflict, any kind of active aggression from Iran to the U.S. is going to be treated much more severely than from the U.S. to Iran, just because of the balance of power there. If, Iran messes around, they're definitely going to find out, and that is going to be a large escalation. That stuff is really, really bad. That's going to make oil higher for longer. It can bring in other, geopolitical unrest. The EU is getting involved. They just had their interest rate meetings. Japan has had to look at whether or not they need to increase their rates. There are a lot of things that can make us go higher, and we have room. We can support a higher treasury yield, which means we could actually find interest rates getting up closer to 7% if we don't exit this conflict.
Well, I want to thank you for coming on today. I know we got to kind of wrap up just a little bit early. Both of you have meetings to get to, and I don't have anything to do today, but that's okay. We'll kind of wrap things up a little bit early. Listen, if you take anything away from today's episode, it's this: the market is always moving, but that doesn't mean you have to sit on the sidelines. The key really is to understand your options and have a plan. I think that's the main takeaway for today. So not trying to guess the perfect moment or trying to time the market. But if you've got questions about what this all means for you specifically, whether you're buying or just thinking about it, reach out to the Joes and Nash. We're always here to help walk you through it and help put you in the best financial position for what your goals are. Tune in next week, folks. Next week, we are going to have on going in a bit deeper into the Go Broker model that we were talking about last week with NXT Mortgage Coaching, which Nash, the Wizard, is a part of. We're going to be bringing on a special guest, though, Tyler Hodgson. So tune in next week at our usual time, Wednesday, 9 a.m. Central. Even better yet, still go to our YouTube channel at the Mojo Show Real Estate Podcast. And while you're there, hit that subscribe button so that you don't miss an episode, because we are on a mission to get to 1,000 subscribers. And of course, every like, share, and comment helps us reach more homeowners like yourselves. So before we close things out, Joe, any last words or nuggets of advice for our listeners?
Well, I want Nash to be able to put his YouTube channel out there for the market update. If you could tell them what it is, and then we'll put it in our comments.
Yeah, we can go to at the Loan Wizard, and you know what? I'm going to go to your YouTube where this is hosted. I'm going to drop it in the comment section there as well. Perfect. Just to throw a like and comment on this episode, and to have that hosted there. We do our podcast on just the market. It's high level, fun stuff every Monday morning at 9:30 Central Standard Time.
Perfect. Well, I'm Joe Mortgage, and that handsome guy with the beard is Cup of Joe Mortgage, and we'll see you next